On today's episode, I'm going to take a look at one of my tier 1 stocks, that is Unity. They just reported earnings, and after the hours, the stock doesn't know what's going to do. It's going up and down. So in today's episode, what I want to do is take a look at the earnings, talk about what I like, talk about what I don't like, and like always, if this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up, and stay tuned where I live stream here on YouTube. Taking a look at stocks you want me to look at. So let's get started. Alright, like I mentioned, today we are taking a look at Unity. They just reported earnings. This is a tier 1 stock, and this is a company that holds a very big portion of my portfolio right now. This stock is up 3.6% for the day after hours. The stock has been moving all over the place, but right now it's up about 1.5%. This is traded under the New York Stock Exchange as ticker U, and it currently has a market cap of about $23 billion. And if we take a look at the long term of things, this stock is still down 50% from its 52-week high. So first, let's start off with some of the great things about Unity's earnings, but we're also going to talk about some of the things I did not like. So Q1 revenue was up 41%. This exceeded their expectation, and because of this expectation, the company did raise their 2021 outlook to about $1 billion. The first thing they do mention is they're seeing a powerful transition between linear 2D to real-time 3D. And I think this is a great move, even though it's not really brought out here. Linear 2D, for example, are usually projects that take less money to make compared to real-time 3D. So by this overall transitioning happening, it's telling me that players with more money or bigger pockets are making better projects in Unity. The second thing it tells me right now with this real-time 3D increasement is real-time 3D is not only used for games, it's used for animations, it's used for AR, VR, and other type of content, right? So it's telling me that, hey, they are seeing an increase in other artists and other content creators, and I do believe that's also a great move for the company. Sometimes understanding a little bit behind the market can really understand how bullish you can be within the company. They do say that they believe real-time will continue to grow at an acceleration pace, and Unity will continue to spend their R&D and vertical expansions to enable Unity to lead the transition to real-time 3D. And this is one of my favorite reasons of why I own Unity, because I do believe the future potential that this company has is immense, right? Especially with the AR and VR world that I do believe is coming within the next few years. All right, so now let's take a quick look at financial highlights, but first, let's take a look at today's sponsor. But before we begin, let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. All right, so like I mentioned, Unity's revenue was up 41% for the year for this first quarter, right? Strong growth right now, that's super impressive. Now, if we take a look at the revenue segments, for those that don't know, there are 3 major segments where Unity operates in, but only 2 really make most of the revenue, and that's creative solution when you make a game through Unity, or operate solutions when you have some from a finished product and use some of their solutions to kind of promote or work on that product after it has been made. Those 2 solutions have increased in revenue 51% by create solutions compared to the same time last year, 40% to operate solution. Those, I want to say, are the biggest drivers. I could really care less right now for strategic partnerships and others. Now let's take a look at some of the negativity, right? There's always something bad within the company. Can't be all green and stuff. The first thing is loss from operations has kind of ballooned dramatically compared to the same time last year. Right now, losses for operations on GAAP values are 47% of revenue. That is insane, the amount of expenses this company has right now. This is compared to 16% a year ago. Huge growth there, and this is something investors should definitely keep an eye out. They do mention the main reason for this impact in expense growth is because a lot of it is coming from stock-based compensation. Because a lot of it is coming from stock-based compensation, we're gonna have to also take a look at non-GAAP loss operations. And they do share that after, right? Non-GAAP loss from operations were 10% of revenue this quarter compared to 8% same time last year. So even though it's not as big growth, right, compared to the previous one, it's still growing compared to same time last year. And this is something investors, again, should keep an eye out. I do want to say it's just this company continuing to invest in this technology. Next thing we also want to take a look at is their overall customers generating more than $100,000 of revenue for every trailing 12 months has grown to 837 compared to 668 same time last year. Like we saw, this company was negative loss on operations, but not only that, they're also negative in cash flow from operations, and they're also negative in free cash flow. So this is something, again, I'm not a huge fan of, but one thing that helps me overlook it is the amount of cash this company has. They have about $1.1 billion of cash right now. Unity also gave us some recent business highlights. The first thing they're saying is that they're seeing now customers in a wide range of industries, pretty much because they're growing in that 3D platform, real-time 3D platform, right? They're seeing customers in household, in appliances, in automotive, in healthcare, aerospace, government, as well as multinational retailers. One of their examples was VertaMed, which allows surgeons, physicians, and medical educators to train in risk-free virtual environments and simulations for different diagnostics and therapeutic procedures. So you can see just the wide range that this company can provide. And for that reason, I kind of overlook those negativities that I see, because the amount of growth this company can really expand to is insane. Next thing, they mentioned that King released its first title built solely on Unity. For those that don't know, King is owned by Activision. Activision is a big player in the gaming world. And they just created a game called Crash Bandicoot for the franchise, a first 3D mobile title by them. And they chose Unity to make the whole game. So I do believe that was a great move. It shows that even the top dogs in the gaming market are coming to Unity. Next, the company did give us an outlook for the upcoming quarter and the upcoming year. For second quarter of 2021, they expect revenue growth of 30 to 33%. Strong growth still, right? I'm super excited. I'm hoping they grab even more customers and, again, surprise us with that revenue growth. At the moment, they still believe they're going to be non-GAAP operating margins of a loss. For the full year of 2021, they expect about 29 to 31% year-over-year growth. Strong numbers again, but still, they're still expected to be non-GAAP operating margin negative, right? So not profitable anytime soon. Maybe 2022 might be the year, but I think 2022 might be the year they might break even. 2023 might be the one where we really see some strong positive numbers. The final thing I want to mention before sharing my overall thoughts is like I said, right? This company has plenty of cash. They have about 1.1 billion in quick cash, but they also have about $500 million in marketable securities. So about $1.6 billion of quick cash available to them, and they have no debt to their name. So again, even though they're negative right now in cash flow, in earnings, because of this amazing balance sheet that they have, it allows me to overlook it, but I still understand the risk. So now let me share my overall thoughts. Unity, for me, is still a tier 1 stock. Like I mentioned, I'm really liking the prices it's at right now. Unfortunately, it's already a big position in my portfolio. So even with some pullbacks, I'm not adding too much. Just like I mentioned, because it is a big exposure already. If it was a smaller exposure in my portfolio, times like right now, even with this uptick for the day, even with this uptick after hours, it would still be a stock I wouldn't mind continuing to add. This is a long-term investment, and over time, it will be very volatile, right? I do believe until it becomes somewhat profitable in at least non-GAAP margins, we're gonna continue with some volatility, and that's okay with me, right? Because I am a long-term investor. So I hope you guys enjoyed today's episode. Take care. See you next time.